So if you're a student, you are all too familiar with the pain of tuition fees, right? But what if I told you those thousands of dollars could actually be your secret weapon come tax time? We're about to break down exactly how you can turn those massive costs into some serious savings.
It's just relentless, isn't it? Every single semester, that bill shows up and it can totally feel like you're just pouring money out while trying to get ahead. That financial pressure, yeah, it's real. But here is the good news. The Canadian government actually has your back on this one. There's a tool designed to fight that financial drain. It's called the Federal Tuition Tax Credit. And trust me, it's your key to getting some of that hard-earned money back where it belongs, in your pocket.
So what exactly is this tax break? Let's crack this thing open. Think of it less like some complicated government program and more like a financial thank you for investing in your own future.
Honestly, the idea behind it is super simple. This credit directly chips away at the amount of federal tax you owe. So, no, you don't get a surprise check in the mail, but the end result is pretty much the same. The government takes less, and you get to keep more.
Okay, so how do you unlock this awesome benefit? Well, it all boils down to one single, crucial document that your school gives you. This form is your golden ticket to tax savings, so let's take a closer look.
This form right here, the T2202, is automatically sent out by your university or college. It's got all the info the Canada Revenue Agency needs about what you spent on your education for the year. Now, I know what you're thinking. This form looks a little intimidating with all those boxes and numbers. But for this tuition credit, you can pretty much ignore almost everything else. There is one number that is your absolute focus. You've got to find box 26. Why box 26? Because this single number is the grand total of all your eligible tuition fees for the whole tax year. Every calculation we're about to do, it all starts right here. But what does eligible even mean, right? Well, the government is pretty specific. Your core academic costs, things like admission and exam fees, they're in. But all the other lifestyle costs, like your campus parking pass or your rent, those are out. The best part, though, you don't have to figure this out yourself. Your school does all the math and just puts the final number for you in box 26. Okay, so you've got your magic number from box 26. Now what? Let's walk through the super simple math that turns that tuition figure into actual, real tax savings.
First, a key term you need to know. This is a non-refundable credit. All that really means is it can erase your tax bill completely, bring it down to zero, but it's not going to give you cash back on top of that. So if you owe $500 in tax and have a $1,000 credit, your tax bill becomes zero. But what happens to that other $500? Don't worry, it doesn't just vanish. We'll get to that in a minute.
All right, ready for the number that makes it all happen? It's 15%. Why 15%? Well, that's the lowest federal income tax rate, and the government just uses that as the baseline for figuring out how much your credit is worth. And the calculation, honestly, it could not be easier. You take that amount from box 26, you multiply it by 15%, and boom, that's the value of your federal tuition tax credit. It's really as simple as that. Okay, you figured out your credit's value. Now comes the fun part, the strategy. See, this isn't just a number on a form. It's a financial asset, and you have 3 distinct, really powerful ways you can put it to work. This is the big question for most students, right? You're working part-time, or maybe not at all, so your income is low and you don't actually owe any federal tax. Does that mean the credit is totally useless? No way, absolutely not. So, choice number 1, the most straightforward option, is to use it right now. If you do have some federal taxes to pay, this credit is your first line of defense to slash that amount, maybe even all the way down to zero. And that brings us to choice 2, and honestly, this is the powerhouse option for most students. You can carry it forward. Any credit you don't use doesn't expire. You can save it up and unleash it in a future year when you've graduated and you're finally earning a real salary. It's like banking tax savings for your future self. But what if you don't need the credit now and you know someone who does? Well, that leads us to choice 3, transfer it. This is your chance to give an immediate financial thank you to a family member who's maybe even helping you out with your education. So who exactly can you transfer it to? The rules here are super clear. You can transfer it to your spouse or common law partner, or to one of your parents or even grandparents. Now, there is a cap on this generosity. You can transfer a maximum of $5,000 of your tuition amount in any single year. Anything you paid above that stays with you to be carried forward for yourself. And since the credit is calculated at that 15% rate,
That $5,000 transfer translates into a maximum tax credit of $750 for your family member. That is a significant saving that they will definitely appreciate. All right, we have covered a lot of ground. So let's boil it all down to a simple, can't-miss checklist for when tax time rolls around. Here's your action plan.
Here is your 4-step game plan. Step 1, get your T2202 from your school. Step 2, zero in on box 26. Step 3, and this is super important, you have to report that amount on your tax return even if you don't owe a dime. And step 4, make the smart call. Are you going to use it, save it, or share it? The choice is all yours. See, by understanding these rules, you've just leveled up. You're not just a student paying tuition anymore. You're a strategic financial planner. So the only question left is, what's your tax plan going to be?